Hey everyone, welcome to another CPI day. Just a quick sound check and then we can get started if everything is alright. While waiting for others to join us. As per usual, we're going to be doing our live CPI trade today. Okay, audio seems to be good on my side. Let me know if there's any issues, but this is news trading session number 3, and as per usual, it's our inflation night or the CPI day. My name is Vida in general. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to a higher trading risk, obviously, and delays in order executions. Be attentive when determining the volume of your transactions and consider all possible risk factors. Okay? All right. As per usual, we're going to be doing our bonuses for participants. You're going to get your promo code to double your deposit bonus in the next slide and at the end of the session. Also, if you registered through email, you should be getting your access to the private Telegram channel as well. All right? For that, what are we going to be talking about today? We are going to talk about what inflation is, a little bit of a background on what inflation is, and we'll take a look at the CPI, we'll take a look at the core CPI, what are those stuff, right? And then we'll go through a real-time example of how to trade the CPI. Okay, this is the promo code that you can use. It's non-farm 2023. Just ignore all the other languages. I'm translating this live for you as well. It's so weird. I have to translate English to Bahasa and now Bahasa to English. But this is to double your deposit bonus. So if you're depositing anytime soon, you can use this code as non-farm 2023. It should be valid throughout the year 2023 or until further notice. But yeah, if you're watching this a little bit late and you're still in 2023, I think you can still use this code non-farm 2023. All right. So about inflation. So what is inflation? So inflation is the rate at which prices for goods and services rise. And the most commonly used inflation indices are the consumer price index, the core inflation, the PPI, right? Those are the index that we are using. The consumer price index is a critical indicator of pricing pressures in an economy. It provides a gauge of inflation, and forex traders monitor the CPI as it can lead to changes in the monetary policy decisions by the central bank that will either strengthen or weaken the currency against the rivals in the market. And the reason why we are looking at the CPI tonight, and the reason why it's very important, because next week we have the FOMC meeting that, I think some traders are considering whether or not there should be an interest rate hike in September, or maybe are they going to push it to November. But I think the assumption for this year is that, the FOMC has one more, or at least one more interest rate hikes. I think there should be 2 more, but it is what it is. In terms of the leeway that the market, the FOMC can go for, it's currently at 5.5%. They could go 5.75% or maybe 6%. But that all depends if the inflation picked up this month, because we saw a little bit of an increase in the previous month, which I'll go through later on. All right, so we have CPI today. That's our focus. And then on Friday, is it on Friday? Let me just check. I think it is on Friday, but there's PPI this week as well. All right, so CPI is from the consumer side. It measures the cost of living. It includes broad range of goods and services purchased by consumer. It also includes international personal consumption items. The word is personal, right? Scope excludes changes in interest rates or costs, okay? Now, the PPI is the producer side, right? So the CPI looks at how much a consumer pay for something. The PPI looks at how much a producer pay to create something, right? To produce that. So PPI measures real growth in output, includes items produced for personal consumption, does not include imports, encompasses services with prices including an interest rate component. So you have 2 set of inflation index, right? It's CPI. This is from the consumer side. The PPI is from the producer side. Okay. So that's inflation. That's when we talk about CPI, right? We refer to this as, whether it's going to be a year on year or whether or not as the month on month changes. The focus is actually on the year on year. So you're going to take a look at the calendar. Sometimes they're going to write it out as CPI YOY. So CPI year on year. That's the focus for every trader. That's what everyone is dialing into first. All right. In fact, tonight we're actually going to be looking at 4 sets of data. It's not just the CPI, but the headline inflation. If you hear the word being mentioned, headline inflation equates to the year-on-year CPI. Right. So those are the changes tracked by gains in terms of year-on-year. So the number today is actually for August CPI because this is the start of September. We're not done for September yet. Tonight's CPI is actually August CPI numbers, and that's tracked changes from August 2022 to August 2023. That's how we measure the headline inflation number, okay, or the year-on-year CPI. They're both about the same thing. So if you sometimes read up an article and say headline inflation, it's always the same as the year-on-year CPI. Now, the next thing that we take a look at is the core inflation number, or the core CPI year-on-year, okay? The core inflation or the core CPI refers to the change in prices of goods and services, excluding those from the food and energy sectors. These items are excluded from this measure of inflation because their prices are more volatile. Typically, core inflation is determined using the consumer price index. When we talk about the food that's being excluded, it's very specific actually. It's actually fresh foods. I think it depends on the countries. But I'm pretty sure in terms of the US, the Europe, and the UK as well, Australia, I think when they talk about food, it's the fresh foods that's excluded. In terms of food, in terms of canned products, I think that would still be counted, into the core CPI. Okay, so core CPI is based off the CPI. It's just that they take away volatile prices such as energy prices, gas prices, right? I think motor vehicle purchases are excluded as well. No, that's retail sales. I'm sorry, that's core retail sales. Right. But yeah, energy prices, fresh foods, they are excluded from the core inflation number. So tonight is actually a little bit unique, right? It's not unique in per se that it doesn't happen all the time, but the market is currently pricing in for the headline inflation to go up, but the core inflation to go down. Okay, so the core inflation basically reflects the underlying inflation. If you take away all the energy prices, fresh foods, all the volatile prices, this is what reflects the underlying inflation. And currently, if you take a look at the headline CPI later, it is actually lower than the core CPI. And in terms of what the central bank is targeting in terms of where inflation is, it's typically the core CPI because the headline CPI is a little bit more volatile. Okay. All right. So let's take a look at the economic calendar. I think we got this easy nowadays, but yeah, we got 20 minutes before we set up our trades and whatnot. But let's take a look at the numbers that we are expecting for tonight. Let me just highlight that this is what we are watching out for, the inflation rate, right? And if you take a look at the number as 3.2, that's the previous month's number or July's number. The consensus is for a 3.6. Now, obviously, you take a look at the site there, there's something called forecast. It kind of gives you a little bit of a range. It's not very specific in terms of the consensus, right? Sometimes there's a forecast, there's a consensus. Consensus is what everyone is going to be looking out for. But when it comes to the forecast that's available, it kind of gives you a little bit of a range on where that inflation number could come in. Okay, so it could go up above 3.2%, but maybe it'll just reach 3.5%. The market is expecting 3.6%. Okay, If the number comes in higher than what the consensus is, that means the headline inflation is higher than what the consensus. Therefore, it's more of an upside surprise. The way we look at it is that inflation has heated up in America a lot more than what the market has priced in right now. That means if we have a CPI number that's higher than 3.6%, we are likely to see a stronger US dollar. Okay? Now, the problem with a lot of traders trading the CPI is that they only focus on the headline CPI. Matter of fact is we also need to take a look at the core inflation. Now, if you take a look at the core inflation here, the previous number was at 4.7%. It's expected to come down a little bit to about 4.3 to 4.4%. Now, let me bring up the previous inflation number for see if I can put it out here. There we go. Okay, so if we take a look at the inflation number, we have the inflation coming off, right? I think this is about August. Yeah, about July. That's July's number, which is August 2022. So we got a drop from 8.3% all the way down to 3%, which is very significant. And if you take a look at the drop every month, it has been significant. We've seen 8.3, 8.2, 7.7, 7.1, 6.5, 6.4, 6.5, 4.9, 4.1, and then 3. All right, 3 was basically kind of the turning point. So we have seen the inflation drop down as the FOMC continues to tighten the monetary policy. We see the impact here that it has come down. Now, there's always a delay in terms of the interest rate hikes and how it's actually going to affect the market, right? It could be 3 months, it could be 6 months. But if we take a look at the changes in inflation last month, or the July number, August, we actually saw the inflation picked up for the first time in 12 months, right? 3 to 3.2%. So inflation has actually picked up. Now, the argument for this is that the FOMC is about to kind of reach their terminal limit in terms of interest rates. I don't think they're going to go above 6%. They're about 5.5%. The last outlook that they gave out was that there should be a limit at 5.75%. So, market is currently taking a look at one more interest rate hikes. If inflation picks up again, then the FOMC is likely to raise interest rate one more time. That's what the market is expecting. Personally, I'm expecting 2. But right now, in terms of when they're going to hike, it could be this month. It could be next month. The attention has shifted a little bit to next month. But if inflation today comes in a lot higher than what the market is looking at, then September could be another month where the FOMC could hike interest rates. Okay? So that's headline inflation numbers. Now, let's take a look at the core inflation number. Now, the core inflation number has been a little bit all over the place, right? It's not a consistent drop that we saw, like what we saw on the headline inflation number. The core CPI has seen the core CPI gone up, down, and it has been consistently moving to the downside. FOMC and all the other central banks currently has a target of taking inflation back down to 2%. When they talk about that 2%, they're referring to the core inflation. So we have the core inflation still at 4.7% from last month's number. Compare that to the headline inflation, it has dropped significantly lower. Currently, it's standing at 3.2%. But if you take a look at the drop here, it's from 8.3%. The core inflation kind of just fluctuates around the 6 to 5%. So it is a little bit more stable. It doesn't get impacted by, let's say, changes in energy prices, for example, because that's basically what's driving the inflation. In Europe, in the US, it's a different story. What causes inflation is more on the supply side constraints. Okay. But take a look at the current CPI number. It is a little bit more stable. It's harder to fall down. The headline inflation, it's easy to fall. It's easy to pick up again. But the core inflation, it's very hard for the core inflation to actually fall. Now, we have seen a significant fall in the month of July, May, June, May. About the month of May was at 5.3%. June's number was a significant drop to 4.8%. Okay? So, those are the two main numbers that we're going to be looking out for. And today, the reason why it's a little bit unique, it's because market is pricing in for headline inflation to go up, but the core inflation starting to go down. Now, I don't know what the initial market reaction is going to be. Is the market going to react to the headline inflation, or is it going to react to the core CPI? Okay, but if the core CPI drops significantly, let's say we are looking at a core CPI that drops from 4.7% to 4.2%, or maybe 4%, that's going to be a huge shock. That's going to be bad for the US dollar. Also, the inflation rate, if we have a number that's higher than 3.7%, that's good for the US dollar. But if we didn't come up and meet that 3.6%, inflation could still go up from 3.2 to 3.3 or 3.4%. But if it missed the consensus, that's actually going to be bad for the US dollar. That's likely going to be the initial reaction. Okay. So how many things can go here? We basically have about three scenarios. Number one, core inflation doesn't drop as much. It's higher than 4.3%. Headline inflation is at 3.6% or higher than 3.6%. Those are going to be good for the US dollar. If the headline inflation doesn't reach, it didn't get to 3.6%. Let's say it comes in at 3.4, 3.5%, and the core inflation comes down to about 4.3 or maybe lower than 4.3%, then that's actually going to be bad for the US dollar. Now, the third scenario is where it could cause a lot of confusion. If the inflation rate is higher than what the consensus is, but the core inflation drops lower than the consensus, it's going to create a little bit of a mixed data, a mixed feeling into the market. And in terms of how the market react, this one here, this is where it becomes a little bit more risky, because if this third scenario happens, then it could be very unpredictable in terms of where it's actually going to go. So just keep that in mind with the risk tonight, because the market is pricing in for an increase in headline inflation or the year-on-year CPI, a decrease in the core CPI. Okay, so just keep that in mind. Okay, so yeah. On Thursday is actually going to be the PPI. PPI is actually going to be tomorrow, not today. But tomorrow, again, whatever happens today, we might actually not see the real move until the PPI tomorrow. Because if today comes out a little bit more on the unexpected side, then everyone's just going to wait for the PPI number today. So hopefully we do have a little bit of clarity in terms of where the market is actually going to go, right? Because if it doesn't, then it's actually going to create a little bit of a huge whipsaw when we trade in 10 minutes time. So hopefully that doesn't happen. Hopefully we get one data that's significantly above the consensus, for example. That would actually help us a lot, right? Okay. So let's take a look at the previous history on this one here, and I want to spend a little bit on the last month's number that we trade, right? So previously, if we take a look at this one here, the CPI falls down, just by a little bit. The market shoot up a little bit on the euro, and then it reverses. So be very careful with the euro, the CPI number, because it could trigger a move in one direction, and you need to make a quick decision whether or not you should stay or you should get out. Okay, like what we did last month as well. So yeah, doesn't matter what it is. It typically creates a huge movement in the next 1 hour, and then the market could, kind of revert back to itself, or like the previous month's example, it went one direction, reversed, and then continues to go in the other direction for the next few days, right? So I want to show you what happened previously. Okay, this is already on a bar replay. This is something that we're going to be doing 5 minutes before the news gets released. We want to create a range, right? We want to create a buy stop and a sell stop order. The logic here is that I want to create a range that we can identify today, and I want to create an order for a long position, for example, over there, if it does go to the upside, and I want to create a short position at the same time if it breaks to the downside. Now, let's see what happened last month. I know last month was great. If you guys missed it last month, you can go look for that video because I think we ended the trade within the first 1 minute. But this is the initial market reaction. Right? It spikes. It takes out the order and basically it's, kind of hits our target and we get out. And if you had overstayed in that trade, which was done pretty much within 1 minute. This is on a 5-minute chart, by the way. Look what happened here, because we have that drop in, so we have a little bit of an increase in the CPI number, right, from 3% to 3.2%. The expectation was actually 3.3%. Okay, this is what happened if we didn't get out of that trade quickly. So tonight we need to set our position, look at our profits, we are happy with it, get out from the trade. Simple as that. Okay, if you didn't get out, this is basically what happened. It kind of actually reversed on itself. Okay, and the reversal was pretty much a long drop to the downside. So we want to get in, we want to get out. Once it's done, the dust has settled, the news has been processed. We'll take a look at all the numbers, and then before the end of the session, we might actually look at opening a trade once everything has settled down. Okay, so that's basically what we're going to be doing, and that's an example of last month's trade. Now, I'll switch to the MetaTrader later on, but right now, because MetaTrader, the fonts are pretty small, I want you guys to just follow me and highlight some of the ranges here. In terms of the Euro USD, you really want to highlight. You can go into the 15-minute time frame, but the Euro USD, you want to go with an upper range at 1.0750. Okay, and the lower range, you have two options. You can choose 1.0725. I think it should be enough. All right, 1.0725, and then you can target 1.07 later on. Now, for example, on the Euro USD, what you want to do is you want to create a buy stop above there, and you want to create a sell stop just below 1.0725. Okay, so you need to create two orders. I'll switch to the MT4 later on, but I just want to give you the key levels first. This is on the Euro USD, and on the Pound USD. Let me hide the sessions so we don't need to look at that. Okay. Pound USD, I believe the floor is 1.2450. So you want to have that at 1.2450. In terms of the upside, you really want to, give a little bit of range on the Pound USD. If you want to go onto the small time frame, on the 15-minute time frame, you can actually use this as the upper range, but it's only about 15 pips of difference. I'm okay with leaving it at 1.2450 and 1.25. Okay, for the Pound USD. Now for gold, you can do the same thing as well, but you need to go onto the hourly time frame for gold. And for gold, you really want to take a much larger range on this one, probably about 1808. Yeah, about 1808 for the lower range. For the upper range, you can go with about 1913, 1914. So 1914, buy stop, 1908 as a sell stop for gold. Now let's transition to the MT4 because the news are going to get released in 5 minutes time. There are a few other things I want to take a look at, but I need to place my orders on the MT4. Okay, so I want to have this is on the Euro USD. Have it at 1.0724. That's completely fine. To the upside, I want to have it about 1.0750. That's my buy stop. Now for the Pound USD, I would have it a little bit lower, maybe about 1.2440. Yeah, 1.244. The reason why I have it a little bit wider for this one here, I don't want to get a whipsaw in the market, because that's going to cause a lot of problem, right? So anything above 1.25, lower than 1.2445, that's okay for pound USD. The dollar Japanese yen, remember, if trades are executed, you need to close the other orders, okay? For the pound USD, the dollar Japanese yen, I want to have a sell stop below 147, and I want to have a buy stop slightly higher, about maybe 147.60. All right, just give it a little bit more room, and we can target that gap there on Monday as well. It hasn't been filled yet. Okay. Okay. For gold, this one here is actually 1915. Yeah. So I want to create a buy stop higher than 1915, or maybe at 1915. That's completely fine. A little bit higher than 1915, a little bit lower than 1907.50, so about 1907. Okay, so those are the orders. Orders has been filled in. There are a range as well for the dollar Swiss. If you want to trade the dollar Swiss, you can have your buy stop slightly higher than 89.40, right? I'm going to go my buy stop over there, and my sell stop, I'm just going to adjust it a little bit lower, maybe below about 89. Okay, dollar Canadian, you also can trade this because it's prone for a breakout. Dollar Canadian buy stop is at 135.78, maybe a little bit higher, 135.80, and a sell stop just below 1.3542, about 1.3540. Okay, so you got trades for dollar Canadian, dollar Swiss, euro USD, pound USD, dollar Japanese yen, gold. Now, we want to monitor this. If it's profitable, we need to act very quickly. Any orders that are triggered, we kind of need to close the other side as well. Now, the euro USD are very close to the sell stop at this point in time. Morning, Chucks. How are you, man? You ready? All right, well, I'll do that. I'll just wait for the news, and you guys want to copy whatever you see on the screen, that's fine. So everyone is paying attention. Let me read the sell stop order for euro USD is at 1.0725. The buy stop is at 1.0750. Actually, I need to adjust it a little bit higher. Okay. Pound USD, a sell stop at 1.2440, a buy stop at 1.2501. Sell stop for dollar Japanese yen, it's lower than 147. I place this at 146.96. Dollar Japanese yen buy stop is located at 147.60. Buy stop for gold is located at 1915.5. Sell stop at 1906.96. Dollar Swiss 89.43 for buy stop, sell stop at 89 cents. Dollar Canadian 1.3580 and sell stop at 1.35399. All right. So the news are gonna get released anytime soon. Let me just move this here. Okay. All right. Any moment now, we're gonna get our news release. All these products, okay, something hits. No, not yet. All this preparation only for news to continue in consolidation till tomorrow. Probably not. I think we could potentially see a breakout. Okay, it's starting to move. All right, I got my buy dollar yen. I got sell. Okay, a little bit of a mixed trade here. Euro USD sell was triggered. Inflation rate was at 3.7%, higher than consensus of 3.6%. I'm going to cancel my Euro USD. I'm going to cancel my dollar Japanese yen, cancel gold, dollar Swiss, dollar CAD, and my pound USD. All right, got it's up and running. Core inflation, it's at 4.3% as per consensus. But the headline inflation comes in a lot higher at 3.7%. So initial reaction is that we are looking at a stronger US dollar at this point in time. So just keeping it steady. So yeah, a little bit of a mixed data because we got the core CPI coming down. The headline inflation comes in higher at 3.7%. Okay, I think there's a little bit of a problem here. I got buy. No, that's correct. Yeah, everything's good. Got buy dollar Swiss, buy dollar Canadian. Everything's good. All right, so I'm just letting this run. Let's see how the initial reaction is in the market. Looking for changes, ideally, but let's keep an eye out on the 5-minute time frame, or maybe you can go into the 1-minute time frame. You can, monitor it if you want to. It's still looking good. Remember, if you're happy with what you get, you can get out right now. I'm just waiting for this total to maybe hit 200 plus ish again, but we'll see. There's gonna be a lot of movements. So you need to cancel out other orders, otherwise it's gonna trigger both ways. It's gonna be problematic. There's something it's not right. The pound bounces up a lot higher than what we're looking at. Okay, so we'll wait. But if this continues to go back up, we might need to close out because obviously it's not looking profitable at this point in time if the market whipsaws to the upside. Yeah, the inflation rate, I'm just going to take a look at the monthly numbers just to give a little bit of a reading here. Inflation rate changes month on month, 0.2% to 0.6%. Yeah, it's still as per consensus. Core inflation change was a little bit higher. 0.2 to 0.3%. Okay, I think we might see a little bit of a turnaround. Okay, regardless, whatever the stop loss is, if you're wondering, the stop loss is actually going to be on the other side of the range breakout that didn't get triggered. Okay, so that's going to be our stop loss. So anything can happen now, but we need to still have our stop loss just in case the market snap back and it's not gonna go in our favor. But yeah, this one here is a little bit lower, about 89. So Canadian, yeah, I would rather have the market stop me out because this is not looking too good. It's snapping back. It's probably the core inflation that gets a much better reading right now because the core inflation dropped from 4.7% to 4.3%. Headline CPI, as I said, it's not going to be the main focus from the FOMC. I think the FOMC will take a look at the core CPI, and the core CPI is dropping from 4.7% to 4.3%. I think we might get stopped out on some of these trades. Well, we'll see. The Pound USD still have a lot of range there. The raw Japanese yen still a lot of range. Gold also a lot of range. Not too concerned. Dollar Swiss, dollar Canadian are still okay. The range is pretty small. The Euro USD might get stopped out though. So far so good. We'll see what happens here. But yeah, I was hoping that we can go into the 1-minute trade, which we could, right? But I was aiming a little bit higher because we were taking a look at the headline inflation higher above consensus at 3.7%. So again, as we come in tonight, we were coming in towards a little bit of a mixed data, right? Because the expectation is the headline inflation to go up, the core inflation to go down. And that's basically what we get. The core inflation is down at 4.3%, which is per consensus. Headline inflation picked up to 3.7%. And the reason why I was a little bit indifferent, unlike the previous months, is because we are coming into a market that's expecting these two numbers to not be aligned with one another, right? So as I said, I don't know what the initial reaction is going to be. I think the initial reaction was a reading of 3.7%, but then everyone, I think, takes a look at the core inflation and say, oh yeah, you know what? It's a huge drop, 4.7% to 4.3%, which is something the FOMC will monitor for. All right, I think I got stopped out on the Euro USD, which is fine. It should have been positive for the dollar, right? Because core rate month on month increases. Yeah, the core rate does increase 0.3% growth. So I don't know if this is just the initial market reaction or anything like that, but it's fine. We'll see what happens here, because if it breaks the other side, then I need to go. I think I can leave this one here and we can go back to trading view. I need to look at the market correctly to kind of figure out what's really going on. Let me just check it on the hourly time frame first. The pound USD is fine because it bounces off 1.2450. It snapped that though. As long as it doesn't close above 1.25, short position should be okay. But if it goes above 1.25, then we need to close that short position anyway. All right. Dollar Japanese yen. This one here is a little bit flat, not too keen on anything. Dollar Canadian, it spiked up. So I think I should get stopped out on dollar Canadian as well. No? Still good? Yeah, still good. Okay. Gold's still good. Everything is still good. Okay. So, yeah, obviously this is the first 5 minutes. The dust hasn't settled yet. We'll see how it goes. The Euro USD does snap our stop loss though, which is completely fine, because otherwise you'll have that stop loss a little bit higher at 1.0765, but we'll see what happens there. All month-on-month CPI data is an increase, so I think it should be strong for the dollar. Yeah, the month-on-month change was pretty big as well. It was 0.2 to 0.6. It's still per consensus, but the changes per month was pretty big. I'm not quite sure about the reading on the core inflation, because the monthly change went up 0.3%, but the core inflation does drop significantly to 4.3%, which is a 0.4% drop, which is very significant. I think this is a very confusing moment at this point in time. But look, if the trade fails, it's okay. We're going to be looking for another trade to look for. That's, once the dust has settled, once we have the first 50 minutes candle after the initial market reaction, then we are going to start looking for, where is it likely going to go. I think this is more a little bit of, a reaction in the market, but it should still be strong for the US dollar at this point in time. Although the core inflation reading could mean that the FOMC doesn't need to hike this month. They could hike in November, because the core inflation is basically what the FOMC is keeping an eye out for. But yeah, the consideration for them is that, hey, you know what? We have seen inflation picked up 3%, 3.2%, 3.7% the past 2 months. So yeah, I think that should be a consideration for the FOMC as well. All right, let's see where this is going to go. All right, struggling to pick up momentum at this point in time for the Euro USD, the Pound USD. But we'll see. We'll see. We've got 7 more minutes to go for the first 50 minutes candle close. Dollar Japanese yen, don't doji on me right now, because it's not going to be funny. Hopefully it does pick up a little bit. Gold is still flat, right? So it doesn't want to go out of that range that we see here for gold. Euro USD, technically, I think we place our stop loss a little bit too close. Because if we go out on the hourly time frame, you should be looking at this range here. This is basically the daily range for this one. So the stop loss should have been a little bit higher. But it's okay. Not a big deal. The Pound USD follows the daily range anyway, so it should be fine. 1.25 and 1.2450. Dollar Japanese yen as well, so no big deal. The dollar Swiss was on the hourly time frame in terms of the range. Dollar Canadian as well. Yeah, same as NFP last week. I think NFP last week was still okay for us, right? If I'm not wrong. I wish it was as good as the last month's CPI number, where we just traded for less than 1 minute and be done with it. It was so quick. I could have done the same thing, but no, I want to target a little bit more than just a couple of pips in the market. But yeah, we'll see. Dust should be settling down soon. We should be able to identify a resistance, if there is any, or is it going to be broken? We'll see. It's holding on strong, which is okay. Currently, it's on gold included. It's about negative 100 pips, about 90. Yeah. Was it 90? The $1 is standard? Yeah, 10. No, it's about 90 pips at this point in time. Okay, right. So far so good. We'll leave this. We'll come back to that. Any requests for anything that you guys want me to take a look at while we're waiting for this to kind of terminate the first 15 minutes candle? But yeah, if you want me to take a look at something else that's not discussed tonight, feel free to let me know while I'll wait for this one and make a decision whether or not we should actually stay in this trade or get out of this trade. I don't even have to have a reason to actually get out right now because I do have my stop loss placed. But yeah, stop loss placement, I got filled in pretty low as well, right? I've got sell pound USD. I got filled a little bit lower. I got filled about 10 pips down because I put my order in at 1.24, 1.2447, I believe. I got filled in at 1.2439. Dollar yen was alright. Gold is alright. 1907, I got filled in 190674. But yeah. Yen crosses. Request a position adjustment. If you have a position adjustment that you want me to take a look at, sure. Dollar Mexican, I'll be honest with you, in my whole trading career, never look at it. But yeah, I mean, if that's to your liking, let's have a look at dollar Mexican. Okay, very interesting. Maybe I'll look at dollar Mexican. I don't know. I've never looked at dollar Mexican. I hope this is not a joke, right? I don't even know. I don't think it's even on TradingView, but it should be here if you're looking at that. So I'm just gonna pull it out here. Okay, it's there. I'll be honest, never in my trading career have I ever looked at dollar Mexican. But again, as per request, someone requested, then obviously it's something that I have to look at. With this CPI data, is it good for risk assets? Yeah, it's still good. This is my point of view, right? If we manage to even come down close, if we see a little bit of a stronger US dollar, it might not last long, okay? Because the core inflation is down. I think that's basically the focus of the FOMC. Okay? Dollar Mexican, I'll be honest with you, there's nothing to trade with the dollar Mexican. I don't even think this is even out of the current range, but if you're looking for dollar Mexican and you're thinking of going short on this one, just make sure there's a close below 1720. Okay. Can you go long dollar Mexican? I'm not sure. Look, I'll be honest with you, I've never seen dollar Mexican in my life. It should still be weak for dollar Mexican. Just going by the Ichimoku, I think we are looking at a Tenkan and Kijun-sen still pointing to the downside. Prices below the Ichimoku cloud. In terms of the Chico span, yes, prices still lower. So if you're thinking of trading dollar Mexican, if it closes below 1720 on the early time frame, then yeah, maybe you can consider that. But yeah, jokes aside, let's go back to the real matters. Let's take a look at the yen crosses, shall we? Dollar yen we take a look at dollar yen. Sterling yen, it's done. Sorry, let me just get rid of that. Done. All right. Sterling yen, I think we have a little bit of a resistance coming at 184.25 ish. That would be your resistance range for sterling yen. Can it still go up? The yen crosses probably is a good choice because it doesn't directly get impacted from the CPI numbers. But yeah, sterling yen, I think we still have a little bit of resistance. Currently at 184, it needs to break above 184.25 for it to continue to move and track higher for the sterling yen. Okay, Until then, until that happens, it's going to be really tough. But this is the current outlook on the selling yen. We have completed a correction towards 61.8% on the daily time frame. So in terms of potential correction to the upside, yeah, we could be in for that correction. In terms of how far up we can go, I think we still need to be very careful at about 184.50. So intraday wise, I think we should be careful at 184.50 and 185 for selling in. Definitely not looking for a short, because on the hourly time frame, this is still above the Ichimoku cloud as well. Yeah, look, the CPI is not high, okay? Just don't focus on the headline CPI, because the headline CPI is at 3.7%, but the core inflation number, or the core CPI, drops down from 4.7 to 4.3%. And the FOMC is going to look at the core CPI and say, hey, you know what? The core CPI goes down, right? Inflation goes up a little bit, 0.1% above consensus, but the core CPI continues to go down. We are likely able to control inflation with one more interest rate hike. So with what's going on, I think they might actually pause in September. They won't hike in September, but they'll hike in November. All right, so that's selling in. How do I think FOMC will react to the? I just said it. I think the September meeting. I think that they won't hike in September. Okay. Trading views at futures when you type in. Look, I hope that dollar Mexican request was a joke, but I take a look at it. But feel free. I don't think a lot of people are going to be trading that. All right, let's take a look at the Aussie Japanese yen. Aussie Japanese yen. I don't quite like the Aussie Japanese yen. Just going by how it's been trending. It's not trending at all, right? Take a look at the Aussie Japanese yen here. Let me just remove everything just to clarify a few things. We kind of dip in and out of the Ichimoku cloud, so it's a little bit choppy to say. In terms of immediate range for the Aussie Japanese yen, we are looking at about 95, 94, 93.60. Yeah, about 93.50. So we're technically within the range of 93.50 and 95 on the daily. And let's go into the hourly time frame, see what we can do on the Aussie Japanese yen. I think this one here could push to 95, but don't overstay if you're trading the Aussie Japanese yen. Look, I'm not really too keen on shorting the yen at this point in time. So, and if you go along Aussie Japanese yen, sterling yen, and euro yen, or even dollar yen, just make sure those are going to be your intraday trades, okay? All right, let me go back for a little bit, see how we're doing on this one. So good, still so good, right? We got one stop loss, the other position is still running, okay? So I'm just going to leave it running. Euro USD is still within range, Pound USD is still within range. I don't like the first 15 minutes though, but I'll be honest with you. But we'll see what happens on the early time frame. Okay, let's go back to the Aussie Japanese yen. List on the early time frame, it is very choppy. I would say it would potentially go to about 95. That's going to be about resistance 2, but that's pretty much it. If you're looking for a trade on the Aussie Japanese yen, I would prefer to go long Aussie Japanese yen, but your stop loss, it varies. I think you should be looking at about 94.20. Your target level 95 is kind of max-ish today. So risk reward ratio, it could be less than 1 if you're targeting resistance 2 on the pivot. That's about 32 pips. You're risking 37 pips. I would take this one rather than the 95. Because I think the movement is likely going to be limited for Aussie Japanese yen. Gold, be looking for a long or short. Right now we are short on gold, but I don't know because it came back within the range, and I'll show you the range for this one here. So unless we have an hourly close outside of 1914, or below 1907, then we'll see. But right now, it's looking like this could actually break, and our trades could have failed because I think the market is currently looking at the core inflation rate. The sentiment has shifted to look at the core inflation rate that has fallen from 4.7% to 4.3%, which is not good for the US dollar at this point in time, because then the FOMC is going to look at that and say, look, we have a dropping core inflation number. We are going to kind of pause a little bit on the rate hike. We'll probably think about doing that in November. So for now, I think gold would potentially rally up. So if you ask me, right now, what do I want to do for gold? I think if there's an hourly close above 1914, we could track a little bit higher towards 1920. Okay, but give or take, I think this has established a strong support level if it stays there. But that's me. Okay. It still bothers me though. Something is not right, because if we take a look at the changes per month, core inflation changes per month, it is actually above consensus at 0.3%. Monthly changes on inflation is still high at 0.6%. So it is, I'll be honest with you, it's a little bit of a mixed data. This is the third scenario that I was discussing. This is the worst case scenario because it creates a lot of it becomes unpredictable, because we are relying on what the market is looking at right now. What is the market thinking? What is the sentiment right now? What are they pricing in? That becomes a problem, because it's going to be very hard for us to track the direction of the US dollar itself. Again, the market comes in today expecting this number to diverge anyway. The inflation, headline inflation to go up, the core inflation to go down. We get exactly that. The core inflation goes down, headline inflation goes up, and even go above the consensus. So this is the third scenario that I discussed earlier. This is probably the worst case scenario because we don't have a clear direction in terms of where the market's likely going to go. Okay. All right. So yeah, I think this is probably going to be a losing trade today, which is going to be our first or second losing trade in the past 4 months. But yeah, so far this is kind of all still within the range. I don't know what it is. I think we might actually leave this trade. But if you don't want to leave it, you think there's a lot of uncertainty going on, this is not a lot of pips. If you only trade, let's say, on the pound USD, it is not a lot of pips. Okay, we're looking at maybe about 50 pips ish, and if you think you want to cut it off if you don't leave it longer, because I think it'll take a little bit of time to process what's going on. I don't think this can be done in the next 7 minutes. You guys on the Telegram channel, and I can update you guys there on what we're looking at today, but I think I will need to wait for the first 2 hours to pass before I can make a little bit of a clearer direction in terms of what the sentiment is going to be. Right now, I think the market is still kind of, pulling along in terms of, should we go with the higher inflation, headline inflation, or should we listen to the lower core inflation? What's the FOMC going to be? Personally, I think the FOMC will consider the core inflation as a drop in the market. I think they would call that as a good sign that we have inflation under control. It is still high, but we will potentially pause right now and wait for upcoming data to see if the core inflation does continue to go down. Okay, I think that's what the FOMC is likely going to take a look at. And I think that would be what the market should be assuming going forward until next week. Gold makes double bottom. I think gold makes triple bottom, right? Yeah, you can call that a double bottom, but the support line has been touched 3 times technically. It is more mixed than the NFP numbers. And look, we know it's going to be mixed because the expectation has been mixed, right? Because we got a consensus of a higher inflation, headline inflation, a lower core inflation. We got that. It's so confusing. It's not confusing per se because technically speaking, if you're looking at this on the hourly time frame and you're trading this normally, you're not scalping under 5 minutes or anything like that. If I were to look at it normally, we actually didn't get out of range per se. In terms of the pound USD, the range is 1.2450 and 1.25. We actually need to wait for an hourly close above or below that range, right? The Euro USD, the range is 1.0750. If it closes above 1.0750, then I think this will track higher. We could potentially go to 1.08 on the Euro USD. So, regardless, it does, it kind of goes one direction and whip back up. But I'll be honest with you, if we look at it normally, we're not doing it right on the news with the straddle. You probably wouldn't be opening a position until the hourly close anyway. PPI tomorrow going to have a bigger impact because today's mixed data? Probably not. If we take a look at the PPI numbers tomorrow, we'll take a look at the monthly change. I think it's expected to go up again in terms of the monthly change. 0.3% to 0.4%. Year-on-year PPI is not the focus. For PPI, it's always the monthly month-on-month number or the monthly change number. Now, tomorrow's PPI is actually going to be a little bit of a mixed number as well. Because the headline the PPI, right? PPI changes month on month, expected to go from 0.3% to 0.4% change per month. The core PPI 0.3 to 0.2%. So if it comes in as per consensus, it's also going to create a little bit of a mixed data as well. So I don't think the solution is actually the PPI. I think in terms of where the market is going to take, where this market participant is going to take the market in terms of where is it going to go in terms of dollar strength and whatnot, I think that should be decided today. And I think it would help if you take a look at the equity market, see how the risks in the market is, okay? Whether or not the risk kind of picked up or, it kind of just stay flat. If it stays flat, then step out of the trade. Right now we have running trades, but if we don't think this is going the right direction, we need to be able to adapt. Look at the readings here, and I'll be honest with you, I need to make a decision in terms of whether or not to get out of the trade. For longer term trades, though, you need to wait for the hourly time frame because there's a higher possibility if the market whips like this, it will actually create a long wick to the upside and to the downside. So, and in terms of where prices, it is actually still within the range itself. Okay. So yeah, US 30 is already picking up. So I think we're looking at a potential, market taking on a risk on sentiment. Nasdaq as well. It's bouncing off. I think there's still a little bit of momentum to go up a little bit. Probably not much. Maybe 40 points to the upside for Nasdaq. And it's going to come up to the daily pivot, which is also the Ichimoku cloud on the early time frame. So it could fail there as well. So just be careful. Go with whatever technicals you're using. Just keep an eye out. I'll be honest with you. I think in terms of today's CPI, all of this is actually still within range. It all comes back within range again. It creates a little bit of a volatility, but is it then tradable? Because I need to make a decision. What if market gets stuck between 1.2450 and 1.25? What am I going to do? Because that's the range. We didn't create a breakout. I was expecting the CPI number to maybe break either side, maybe a close like that to the upside, or maybe like that to the downside. I don't know, but we're not breaking out, so I much prefer to see market just breaks there or breaks to the downside. But yeah, the hourly has closed right now and we're still within range, so not too keen on anything like that, anything at all. All right, guys, I think we can wrap it up for tonight. We got all the stop losses are still there. If you guys want to use the stop losses, feel free to use the stop losses. For take profit, go with a 1-to-1 risk reward ratio on the stop loss. That should be something that you are aiming for anyways. Okay? All right. So, Your USD got stopped out, everything else is still there. So feel free to choose whatever you are trading. You can go with the stop loss. I know you guys are not trading all of them at the same time, but yeah, just look at, let's say you're trading the pound USD, look at the pound USD, use the stop loss there. Do not trade this without a stop loss because it could get quite dangerous. Dollar CAD, dollar Swiss, dollar yen, all still pretty okay. Gold, yeah, somewhere there. All right, thank you all. Let's wrap it up for the month of September for news trading. I guess I'll see you guys next month for the NFP numbers. I think this is actually going to be my last English session for this month. Okay, so yeah, good luck with your trades, and I'll see you soon.